I hope none of you got trampled in the bull stampede on Friday. It just didn't stop even in the after hours. But it looks like the ranchers are coming in. We got some resistance above. We'll talk about it. Big level to get through. Even makes me a little bit cautious on the market, especially with some jobs numbers coming out at the end of the week. We got earnings, most of the earnings out of the way, but we still got some big guns coming up this week. Let's get started here on this Monday morning. Hope we don't scare ya. Boo.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors around the world. Back home, not in Ann Arbor, Michigan, but great game on Saturday. We won't talk about the melee in the locker room afterwards, but let's get to the markets. And it got crazy in the after hours, went up to 24 and a quarter. I hope Triple D was hitting bids then. We're down. We're down 18 handles here at 93 and a quarter, back under 3,900. We'll make that the battle area for today. You have the dollar up 43 cents, a little bit of a rebound. TLT, they're not calling for a Fed pivot yet, down 34 cents, 96.46. Crude's just doing his own thing. Oil stocks are doing something different, but crude's down $1.68 at 86.22. Gold trying to stay in the 1,600 handle, down $2 at 1642.90. Silver, that's down a couple pennies at 1912. Bitcoin futures are up $100 at 20,078. Trying to get a bid here over 21K. And Ethereum futures, they're up $60 at $1,622. Let me bring in Triple D and Money Mitch. And Triple D, Lily, it was silly time in the after hours on Friday. I mean, they just kept bidding and bidding and bidding, and the only thing that closed it was the 5 p.m. bell.
Yeah, well, and then they stay open on the stocks for 3 more hours after that. So it was a nonstop bid Friday night after hours. I mean, you've got this follow through happening. We've been talking about the buy the dip mentality, which is fully on. We saw it Friday morning, right from the opening bell. Stocks were down just slightly, and then they just started ripping them. Is the low end? There's a low end. There's no doubt about it. Is the low end? That's impossible to tell. I still think we're in the buy the dip market, though. So as a trader, I'm buying dips.
Well, this is not much of a dip overnight, considering that the rally that we had. We're down 20 handles, and we got some big data. Mitch, what's your preview? We're kind of data heavy, but it's more towards the end of the week.
Yeah, definitely going to be focused on the jobs number this week. We got September construction numbers coming. We'll get initial jobless claims. But of course, a lot of the eyes will be on the FOMC meeting this week, right? And the question to ask, I think everyone's kind of leaning towards this, but will the Fed signal a pause in the near future?
I say absolutely not.
No. I mean, this is ridiculous.
Isn't this what this rally is on?
It is.
But I think the rally is just on more. And again, take us back. Let's go just back to where it all started. It started on that CPI day when the data came in hot and we tanked, the 100 S&P points, Joel, in about 100 seconds on that 830 number. It was a mess. I came on and I was like, I cannot believe we are still hot on these numbers. And Mitch called it. Mitch said, is this the capitulatory bottom? He just threw the question out there. And I'm like, I don't know. I don't know at this point in time. And it ended up being the short-term capitulatory bottom. We can tell because hindsight capital is 2020, and we are obviously up significantly from that. Are we going to have more capitulation and more selling off after? Maybe. But, if you look back, that was a wicked sell-off in that 10-minute period. They sold stocks, if you just go down and look at them all. I mean, Square made it slow that day. Everything made it slow that day. They were way oversold. So we've turned around since then. But Mitch, you called it, and then you didn't really get fully off the bear train. You're still on the bear train, still thinking that it's going to come back down to those levels eventually. And I'm mixed. I've stayed market neutral. The evidence tells me to sell, but the tape tells me to buy. And that's where I'm like, you kind of got to go short term trading with the tape. Yeah. Dip it, buying is just being rewarded ever since that CPI day.
Definitely. I mean, you're definitely right about that. And I mean, if you've been playing towards the short-term momentum, towards the upside, I'm sure you're loving this recent price action. Now, the question will remain, right? Will Jerome Powell even mention that there could be a pause in the hike rates in the near future? Goldman Sachs thinks that, at least for right now, the 50 basis points is kind of what's going to be talked about for December. I'll talk about what they put out a note today. Goldman Sachs expects the Fed rate to peak at 5%, now calling for 50 basis points in December, a 25 basis point hike in February, and then another 25 basis point hike rate in March.
I think that's what, and Tom Vigor just made a good comment. So maybe the pace of the rates going up is going to decline, and we haven't seen that. I mean, first of all, like total pivot, like total stop raising rates, lowering rates. I mean, 23 first half of 23, second half of 23, 24. Who knows? First, they have to stop going up as fast. Okay, then they have to stop going up. Then they have to stabilize, and then who knows if and when they're ever going to come down again. But the market just seems to be getting way ahead of itself. I mean, you could be bullish, you could be bearish, but I just think the expectations that all these things are going to happen so instant. I just think the market is just getting way too optimistic here. They're optimistic. I mean, let's look at last week. Let's look at the earnings that we got from the big guns. Yeah. I mean, Dennis, you were looking for a bad Q3 earnings season from some of the big players, and you got it. And look what the market did.
This was what I tweeted last week. I mean, Mitch, you could bring up my tweet if you want to go hunt in the background, but I tweeted it out. I was just giving the evidence. I was like, Microsoft down, I think it was 15%. Amazon down 20%. Meta down 25%. Apple was down, but then obviously turned it around. And Google down 7 or 8%. And in that same time period from last week, Joel, S&P's up like 3%. I'm like, if you would tell me, that Microsoft's going to fall 15%, and Google is going to fall 10%, and Meta was going to fall 25%, and Amazon was going to fall at one point in time 25%, and the market was going to be up, I'd say you're nuts. But that's exactly what we have saw is the rotation into low multiple stocks has just lifted this market. I mean, look at Gilead. We talked about Gilead at $70. It's $80 2 days later. I can't
believe that.
Low PE stocks ripping. We called this one. I mean, we don't call them all, but we called this one.
I'm so annoyed at this one because I've been looking at this monthly chart for the last 2 months, and I'm like, man, this looks so good. This looks so good technically. And then I got out of this one with all the
earnings
that was out there, scary. And then all of a sudden now it's just looking pretty in healthcare, which a lot of these major drug manufacturers looking good. Pfizer later this week, so who knows?
I mean, you've got all-time highs from Eli Lilly. You got Merck sitting near all-time highs. You got to go back 20 years. You'll find that 105. 20 years ago. It's coming back, though, from where it was 20 years ago. Again, shows you don't pay 45, 50 times earnings because eventually they can grow into those multiples, but the stocks don't keep going up. I mean, you just go across the board and all the healthcare stocks. They're all near all-time highs. You can grab XLV if you want to. Obviously, full of them, too. Not far from all-time highs. We know what's been driving this market. We said the market's on drugs. The market's on low multiple stocks. That's really what continues to drive the market. So does the rotation, I mean, if we're going to have, earnings disappointments, but they're just going to buy other stocks, it's more evidence that you don't want to be short stocks right now.
That is true right now. It seems like the path of least resistance is definitely towards the upside. We are starting to get a little bit of worrying in wheat prices as they're jumping, and Russia announcing Saturday that it's suspending its involvement in the Black Sea Grain Initiative that was brokered in July, which allowed agricultural products to be exported from several Ukrainian ports. So Russia putting on the squeeze back on Ukraine for their grains to try to be exported out. Looks like they're still being able to get out some ships, but they're starting to be concerned that Russia will start attacking ships that are getting the grains out.
Yeah, I don't have much to say on that trade. That's getting above my pay grade to try to figure it all out. I do see, you've got some of the fertilizer companies that are trading up higher here this morning. I do see Archer Daniel Midland. I have a long position, that full disclosure. I've just an overnight trade. NTR is trading up. It's a mixed market here again. I know you come in here and you think we're down 20 handles, everything's getting killed. It's not the case once again. I see a lot of stocks trading higher. I see the casinos, obviously the Wynn deal here.
Yeah,
or the
let's
Wynn,
go to that.
the Wynn news here is a driver for the casinos here this morning. They're trading higher, but I see a lot of other stocks trading higher here too. I mean, it's the tale of this market where we were a month ago, where everything was moving together, is definitely no longer the case. You now have separation, you have stock picking, you have correlations breaking down all over the place here, which is getting to more normalized markets, which is a good thing. But let's go to that Wynn news. We talked about it. It's the big mover of the day. Obviously, there's not a lot of earnings, but WYNN trading up 6%. Mitch, what is going on?
All right. Looks like Tillman Fertitta is adding to his stake. Of course, he has multiple companies that have a stake in Wynn Resorts, hospitality headquarters increasing here. Also had Fertitta Entertainment. Altogether, it's a 6.1% passive stake in Wynn Resorts. So getting the lift there. My only concern is that there is some COVID lockdowns in China. And last time this stock popped, you can see it on the top right chart that Joel has. That's that pop you see right there. That was shortly lived, of course. Why? Because lockdowns came back for Macau.
Oh, Joel, I don't even know. When has been such a tough stock, because you look at where this thing has come from, was $200 back in 2018, and then obviously, COVID, it got down to 35, and then we had the rally where everybody's going back to normal and everything was casinos were packed, we're going back, and then it was the end of 2021 when everything just got overdone, 143. Come all the way down to 58. I've been long it a couple of times in swing trades. I actually have one good trade on it, then one bad trade on it from a swing trading perspective. You're not far from the lows at 56. If you look, you were where it was, $50, I guess, was the low in July. So you're $12 off of it. I mean, it's beat up. It's a value name. It's kind of stock that people want right now. Kind of wish I would have looked at it Friday, because we'd already be getting immediate gratification off this deal, but hard to chase.
You know what knocked this stock off its keister in 2018? You remember?
Was it the problems with Steve Wynn?
Yeah, exactly.
Yeah.
Yep. And he sold his stock, and these can see, other factors, but that was like pre-COVID. Tillman's talking his book here, right? Because he owns a lot of stuff. So this is the industry that's in. He's a billionaire. He owns the Houston Rockets, so he's adding to his position. It's getting bumped up. I wish I could give you a level here and win. There's really not a good one where I could, say with a lot of confidence, like, hey, lean on this number. So what I'll do is I'll go to my data window and I'll just say you got the pre-market high. A pre-market high is 62.48. Keep that eye as a target and look for a continuation move. And I could see this thing getting to silly town. And I think silly town for this I'd be all out there at 63.90, because 63.98 was your high on October 11th. Coming back on the downside. Tune into your shorter term charts and try and find a place to buy it. Longer term, I'd look. If I wanted to own this stock, I'd look for it to come in under 60, maybe 58.5 to try along. But no idea where to buy this thing.
Well, it isn't happening in Wynn Resorts right now, but in China right now, they're still having issues with lockdown. And it looks like in Disney Park, Shanghai Disney Resorts, going through some struggles right now. Shanghai Disney abruptly suspended operations on Monday to comply with COVID-19 prevention measures, with all visitors at the time of the announcement directed to stay inside the park until they return a negative test for the virus.
Insane.
Anyone that has visited the park since October 27th would also need to test for COVID-19 3 times in 3 days, it said. And so just showing you more and more how stringent the COVID-19 kind of policies are in China right now. And I don't know about you guys, but they ain't keeping me in any park. So I don't know how
What
they
are
were
they to
able
give
to
you
keep
food or
no, they
nuts,
even
Joel.
closed down all the restaurants. They closed down all the rides, all the stores. They like pretty much put them in lockdown, like literally,
That's
like
just
go to your
nuts,
room
Joel.
kind of thing.
I can't understand it. I mean, we've all operated with COVID. It's everywhere.
Insane.
Everybody in all North America knows a couple people that have COVID currently. I mean, my neighbors got COVID. I had it a month ago. It's just everywhere. There's no stopping it. So I don't understand why China thinks they can still stop it by the lockdowns and doing all this. But they continue to try. And every time they try, the China stocks get hit. So, I mean, here we are again. Every time you think, oh, yeah, maybe, that's starting to show some life, boom, like Alibaba washes out back 4 days ago down to 58. Then it gets a nice rally up to 70, and you're like, oh, maybe they're coming back. Now you're almost all the way back down to those lows again. There's so many problems over there. There's so much geopolitical risk. It's still, I analyze everything, long-term investing, short-term trading. It's all risk-reward. I cannot assess the risk in China. I've been saying that. It seems like it's unlimited risk over there, so I cannot invest over there. Can I trade over there? Hedged, meaning I'm long Baba, short Baidu, I'm long Pinduoduo, maybe I'm short JDE. You can do pairs trades, but you got to have that overnight risk. I feel like just hedged because you don't know. Overnight, all of a sudden, boom, they go down 3% on you like this, and they're like FXI down 3% right now, and it's a massive hit. So that's the only way I'm playing China is hedged.
It's just hard. I mean, I don't know how you even have those stocks in the portfolio. I know I'd be freaked out.
It's hard on the long-term stuff. I have a little bit of EEM still in the portfolio from a decade ago. It's been junk. I mean, you kept thinking, it's going to come back. It's going to be a catch-up trade. I mean, you've had, people on CNBC saying eventually emerging markets are going to turn it around. Every time they start to show some life, it's more crap. So it's been a 10-year, maybe even further than that now, it's probably 15-year basically bear market over there. If you compare it relative to the S&P, it's been a serious bear market because S&P has tripled in that time and the EM has gone down. So, I mean, and that's emerging markets I'm talking about. You look at the FXI, which is direct China, it's way worse story. 2016 FXI 30, today it's 20. So here you hold for 7 years and you lose 30% of your money. Man, just doesn't seem like it's turning around any day. But eventually there will be a tradable bottoms. Everything is tradable. But man, the risk over there is pretty much unlimited.
All right, let's go towards the stock that climbed the wall of worry in their earnings report and shook off everything to have one of their best days since 2020. Of course, none other than Apple. Let's take a look. And it looks like they're getting a report here from Reuters getting put out. iPhones could slump by as much as 30% at one of the world's biggest factories next month due to tightening COVID-19 curbs in China. A person with direct knowledge from the matter said on Monday that Foxconn, of course, is Apple's biggest iPhone maker, producing 70% of the iPhones shipped globally. Of course, this makes up 45% of their Taiwanese firm's revenue. And they're saying that there could be some supply issues. Of course, earlier last week, we heard that they were having some lockdown issues, but it wouldn't affect the numbers. Now, a person with direct knowledge stating that this could affect as much as 30% of the supply.
The reversal in here was nothing short of incredible. Rotation here, just, they hammered every mega cap. They wanted to buy something. I guess they decided Apple was the one. The report was not great. It wasn't bad, but it wasn't great. And they benefited immensely from being the last to report of the big guns because all the other guns basically warned and basically didn't have very good reports. And this came out and it was okay. And okay is good enough after the bar was set low by Microsoft and Google and Amazon 30 minutes before and Meta. So of the big 5, this one here, last to report, benefits immensely from it. So they wanted to hit it. They tried to hit it on the report, and then they're just like, now we're gotta buy something. And like I said, I took a picture of those Apple stores. They're still busy. The recession has not hit Apple.
I think the street and I think everyone, I haven't dug into the report and I'm not a CFA and I'm not Gene Munster, but I think what the street is missing with Apple is it's not so much of getting, selling new phones and everything. I think it's more getting out of its getting more out of the people in its ecosystem. And we know how big that is. And I think that you can see maybe declining because, like, oh, cell phones, Bank America, Bloomberg, everything on that, they come out. And I think that if you have that such a large pool of people and you can still get more revenue from them, then the revenue is going to continue to grow. So I'm not so much focused on all this, this iPhone stuff. Eventually, we'll just have one device. I mean, I have a watch, I have, AirPods, whatever. So it was a big move. You always look for continuation moves. Triple D, I know you got your hedge on at 155 and
Yeah.
it's dancing around there right
It's
now.
right there. It's
I
like
know.
I can't get away from where I hedged it. It's like my hedge is like a magnet. It's been up to 170, and I was like, why'd I hedge? And then it was down to 130. I was like, thank goodness I hedged. And now it's back to 155, and I'm still hedged. I can lift the hedge. I might lift the hedge. I haven't decided what I'm going to do.
I don't
I'm carried to
think you want to.
January with the calls and the puts. I may lift the hedge. I have not decided.
Right. When a stock has a big move, off a report or off, some kind of news, you always like to see what's going to happen the following day, right? Dennis, you talk famously about the 2-day moves and stuff.
Yeah.
That's just one hell of a move. We're trading down $1.04. Bad news in China, I know we got some bad news in other places too, but boy, just that closing price from Friday. If you've ridden the ups and downs, 175, 135, holding your breath when they knocked it to 136 in the pre-market. I'd be looking at that close at 155.74, kind of up near the high of the day. 2 other highs in that area. I would be, if I was major bull Apple, I really would want to see follow through today's high and get back up, start working its way towards 160 because there's still a lot of uncertainty in the markets, both geopolitically, also economically. Jobs number on Friday hasn't been moving things as much. But yeah, you want to, after a day like that kind of day, you want to see follow through. If not, there'll be a lot of people, a lot of bag holders from 135 to 145 for that whole period from mid September to mid October. So that's why I'm looking at double APL, and I think earnings season has calmed down. So maybe get Mr. Munster on here because we got some things to talk to him about, primarily the metaverse. But there's your look at Apple.
We'll see what happens in Apple. I'll be looking for a retracement, probably maybe 50% down towards 151. We'll see what happens
You'll find
there.
buyers all over the place if it does that.
Yeah, we'll see if it gets back down there towards that 151 today. All right, let's keep going with some, looks like we got some majority stake news here. Let's go to Emerson Electric. As this was reported here from Reuters, as Emerson Electric is selling a majority stake here of its climate technology unit to Blackstone. This deal is valued at $14 billion overall, but what they're giving is Blackstone a 55% stake in the unit. Emerson will receive an upfront pre-tax cash proceeds of about $9.5 billion while retaining a non-controlling ownership interest. So Blackstone would own 55% of the stake and, of course, would own the majority.
Value stock, kind of stock that's doing very well right now. Obviously up substantially from the lows. When we got down to 72, we're now up 90, but you got major resistance you're coming into at this 90.
This thing has been around forever, hasn't it, Dennis?
Yeah.
I remember.
Oh,
I've
yeah.
ever
Changed ticker symbols once, I think.
Yeah, was it EE? It might
Yeah, I
have been
think so.
EE at one point.
I think it
Because I remember
was.
I used to pick on because it's a little bit thinner of a stock. I remember we used to pick on this in our bright days a little bit. Not that we're not bright now, but back when we were at Bright Trading.
Yeah.
I'm looking at this one and at value, non-value. The monthlies are telling me, Yeah, it's up $1.60. It's nice volume. I would just, if I had held this thing for a long time, I'd be looking. I know you said 90, Dennis, and there is a monthly high at like 90, 90 and a half, but just all those monthly highs there at like 91 and three quarters, 91 and a half. I mean, that just looks like super resistance to me. So until you could clear that, let's call it 91 and three quarters because it splits a lot of highs going all the way back to May. So it's up on light volume. I don't understand the deal. They're getting out. They're selling something. I don't know. Not running out to buy Emerson Electric because they're
I hate chasing stocks.
yeah. And then Blackstone, right? Is I don't know, this whole climate thing. I don't know how well that's worked out.
Again,
So
value stocks are back in favor. Stocks like Blackstone, I mean, even when I'm buying low PE stuff. 6.48% dividend on Blackstone. I don't know what the PE is, but it's low. It's been a rough investing environment, so it does hit some of these companies for that reason. And obviously, stock is off from the highs, but right now, I wouldn't argue if you're buying a stock like Blackstone because it's higher. And again, dividend's not bad at 6.48% in this environment, but the lower PE stuff is just finding bids.
All right,
that's all
going.
what it's all about. My trading is all about pattern recognition. I start to realize, what are they kind of buying here? What are they gravitating to? And, and we try to talk about that on the pre-market prep show. But, it's why I'm looking at Gilead, last week. It's why I was looking at different stocks. It's why I bought Bank of Nova Scotia. Bank of Nova Scotia P is like 8. Some of the banks have already run. So I'm looking at that and saying, well, maybe it's time. So, and it doesn't always work out. They don't all work out. But if you can identify those patterns before the next guy, that's how you make money in trading. It's not short squeezes. It's not, like all these people that are like, this is a short squeeze candidate. People read Twitter and all the junk on social media so much. They're like, oh, look at the short interest in this one. This one's going to go up. That is the worst analysis possible because you know why stocks have high short interest? Because they're crappy companies. That's why. So when you're buying stocks for a short interest, you're trying to get the timing perfect. Meanwhile, the company is burning cash in a lot of cases, and a lot of these companies are ending up going bankrupt. And you're trying to grab the little pop on the potential short squeeze that might exist. 2020 taught people, oh, you buy a high stock with high short interest, you make money. Well, 2022 has been the opposite. The stocks with high short interest have all got killed. Those social media accounts that are just pumping short interest all the time, I think a lot of those people, maybe some of them are pump and dumpers. I don't know what they're doing. But all I know is if you're investing and trading just on short interest, you're doing it all wrong.
What about all those popular guys that were on Twitter? What was the name of that one group that was super popular and had all the guys? We haven't mentioned. I can't even
We never
remember.
talk about those guys or any
Wall
of that
Street
stuff.
bets, man. Come on.
We did
Wall
though.
Street
We
bets.
did
Yeah, I
talk
guess
about
we
it.
did. We did at the time.
We did
for
talk
sure.
about it. They were a presence in the market. It was definitely. Yeah,
That's when retail had the Kool-Aid. There's no more Kool-Aid out there no more.
The Kool-Aid is all gone. It was spiked by the Fed. As soon as the Fed stopped spiking the punch bowl, you had to hit the exit button. And that was it. The Fed stopped spiking the punch bowl almost a year ago here now. Stocks have been straight down since. Eventually, the Fed will start spiking the punch bowl again. Don't kid yourself. It will happen, but it's not happening at this next Fed meeting.
If you see Powell dipping over the punch bowl, let me know. I want to catch that. Let's go towards the next headline here. We'll go to Wallbox, WBX, as they opening their first North American factory in Arlington, Texas. And the reason why we're bringing up this stock, it's a smaller stock, but one of the things is the charging station, right? The infrastructure that is going to get set for EVs. This is designed to produce over 250,000 units in 2022 and over 1 million in 2030. The 130,000 square foot factory would manufacture all of the company's chargers in the U.S. Wallbox's $70 million investment in Arlington factory would support approximately 700 local jobs by 2030.
I don't know anything about this company. I've actually never traded
it's like
it before.
A charge point, if you would want to compare it, or maybe EV Go.
So maybe look at those stocks and use them for your leaders. All these stocks are in consolidation station. Does the EV story get hot again? Definitely at some point in time. I don't know when that is, though. I don't want to try to time that because, I'm long the Fisker. It's the only play that I've really gone in these small EV plays, and it's been a disaster. I bought it $9.30. I think it's $7.75. So obviously we had some good trades off of that in 2020, 2021. Kind of thought like maybe the EV story is getting hot back there in September, and it did get a little lift back up over $10, and it's been cold ever since. So I don't know when the EV story starts to get hot again. Maybe it's now. Maybe it is going to start to get hot again. It will get hot again, though. The problem is, as the story stays cool, these stocks continue to leak. So, you could end up buying something like one of these companies, at $6.75, and then, it goes down to $4, $3. Then it gets hot and goes to $5. I mean, the timing on these things is tough. That's why it's probably best to just stay out. There's easier money than trying to time the EV stories.
The grid, man. I mean, if we are, making this transition, I know this works against my, my bearish oil thesis, but I mean, come on. I mean, how are we gonna, if everyone's driving it? A buddy of mine just bought one, and a hybrid or whatever. I think I would look at hybrids before I would just look at all electric. And they didn't tell him, the charger they put in his house is gonna be 500. Well, it's $2,000. I mean, it's expensive.
Here's a problem. And did anybody else read that F-150 article from like 3 weeks ago on the
No.
Lightning?
Oh,
somebody tested it with the charge on towing capacity.
Yeah,
and they were like, this thing loses all of its charge when you're towing. I don't know if it's true or not, but the article had like millions of hits.
I did see
and they
it.
were talking. Remember that, Mitch? We were talking about it that day.
Yeah.
And I'm like, I've wanted the Lightning for a long time. I read that, and I'm like, I wouldn't buy one of them then if it can't hold the charge during towing. I mean, I'm towing stuff all the time. I got boat, I got trailers. I've got stuff, I'm always towing with my F-150. I'm like, I did not realize that the charge not going to hold. I don't know if it's true or not, but it's going to take more research now. I was like, rah, yeah, I might buy one of those Lightnings. And now that I read that article, I'm like, I don't know. So I don't know if that's true or not, but at the towing capacity,
that's why people buy them. That's why people
like somebody
buy
was
them.
saying it can't go 100 miles when it's
the
towing,
big thing is
heavy.
too is that a lot of those are probably tested with their range and flat land, right? What if you're going through inclines?
Oh, and I'm
what
up
if you're
here,
going through mountains?
Georgian Bay, I'm up here where we got some hills.
Yeah,
some big hills.
I sure hope Ford Motors engineers have looked into this. I mean, come on.
I mean, this is
I
the
don't
question
know
about Tesla Semi,
but
right? Tesla, even with the Tesla Semi truck, what is going to happen to their batteries once they actually have, they're actually
what happened
moving
with
around?
That truck? Where is that truck?
They're supposedly delivering some in December to Pepsi. So that's the Tesla Semi. And that one supposedly has a 500-mile range. I'm wondering if they're going to be able to get 500 miles when the truck's completely full.
And how is it? Joel makes a good point with a good name. Yeah. What about when you're towing? What about the torque? Does it use more fuel too? I mean, more energy? Does it drain? Does it drain that too? So I didn't know. I did take physics in high school, and I did get an A, but that's about it on this one.
But it's not even that it drains it more. That article that I was reading saying your capacity going from like 350 miles drops like 100 miles when you're towing something big, like significantly. And I'm not sure, but I'm trying to read it. F-150s range less than 160 kilometers when towing. I'm just reading from different articles here. I just Google it quickly, in the news, and this is what they were talking about a month or two ago, probably here, but not doing well when towing. So I don't know. Like, it's one thing that you're going to use 50% more fuel, but it's quite another if your battery, the length's going to drop 70 or 80%. That's a big difference. So I'm not sure, but that's something I've got to research further before just jumping in and buying a Lightning.
It's okay. You just got to pull up to the charging station, wait 30 minutes to an hour, and then you can continue driving, Dennis.
Yeah,
Dennis
well, that's another.
I'm not
doing
doing
115 kilometers. Go 100 miles. Let's pull in, wait an hour, charge again, then go another 100 miles, then wait an hour. Your 5-hour trip just took you to 12 hours.
Yeah, definitely. I just did an 8-hour trip, so I could just imagine if I had to have made that 12 hours because I had to stop and charge.
Well, if you had a really long extension cord, then you could just plug it in, drive a little bit, plug it in, drive a little bit, something. I don't know. I don't know. I'm not going to be
We
buying
haven't
enough
verified
150.
any of this information. It's just what we're reading on the internet.
Yes, I
Maybe it's
know.
all wrong. Maybe the towing capacity
reel us
is really
back
good.
in.
But I'm saying, before I jump in, that's the first question I'm going to be asking. How can this thing tow? And I want to see the proof that I'm going to be able to get to where I'm going in a reasonable amount of time.
I fill my tank up like once every 2 weeks, maybe once every 3 weeks. So they're going to have to do a lot for the EV thing. But 8:35. Who do we have lurking in the background there, Money Mitch?
Well, I'm going to reel us in, and we'll get back to the stocks action with none other than Market Structure Mondays. Let's get into it. All right.
Where is he today? They sent you to the dungeon.
Where in the world is Tim
Where in the
Quast?
world is Tim Quast? He's in the dungeon today. We always get these nice views, and all he's got is a boring background. You were bad. You got sent to the dungeon.
Yeah, are you in trouble?
Well, they were bound to catch up with me at some point, and it would be fitting if it was Halloween, right? Actually, I think you can see there. So I'm actually in Asheville, North Carolina.
Oh, you're right. I'm gonna come by, Tim.
So I'm trying to. There'll be some background noise. I'm in a lobby, and so it's a little bit noisy. But no, I'm not sitting in a jail cell yet. Anyway.
That's our chat.
Yet. How's it going? Good to see you. Happy Monday and happy Halloween to you.
Tim gets one phone call, okay, and he's in jail.
Right.
And he gives it to us. He gives us the phone call.
Who do you want to call? Benzinga PreMarket Prep.
Our traders will get you out. Our traders will get you out, Tim.
Yeah. Oh yeah. Our traders will post bail for you. We'll do we'll start a little fun there. GoFundMe to get them out of jail.
GoFundMe.
Did Apple save the market, Tim? Did Apple save the market? And what does it have to do to continue to save the market? Because it doesn't look like it needs a life preserver right now as we speak.
Right. Well, briefly, it was a treat rather than a trick. But the challenge for the market is that there is a sort of, to me, to continue the motif, a devil may care madness about it here into the end of October. I shared with edge users a look at the supply-demand balance in Apple into earnings, and you can understand why it's up. Demand was at 10. And supply took a little pullback. And what we're talking about, traders, is it's the most basic economic principle and it's something you should use as a trader to determine what you're going to do. But the behavior of investors and traders and whether they're buying or selling can be measured. And sometimes it's durable and sometimes it's not. And the supply side is short volume and it's very high. It's very high everywhere. It did pull back. Demand and supply separated. It happened in Apple. It's a reasonable explanation for why Apple rose. But when levels are this high, it's very difficult for stocks to hold gains. So I don't think that it saved the market. And that's a big discussion. And I didn't hear what you guys talked about earlier today. There are folks like Mike Wilson at Morgan Stanley. I think he's a very wise economic market prognosticator, and he thinks that the S&P 500 is headed to 4150 from here because the Fed's about finished. We could talk about that, but I'm skeptical of that view, and it's not because of belief. It's because of looking at the math in the market.
Of course, like always, Tim, we're going to look at supply and demand, but of course, what everyone wants, the all-knowing answer, is the bottom in.
Right. Right, it's the bottom end. Well, you know how I love pithy sayings, and I will use them oftentimes out of sort of theological references. And there's one that and realize this is sort of literary, but in the Gospels, in the New Testament of the Bible, there's this explanation of what happened around the flood in the Old Testament. And it says they were eating and drinking and marrying and giving in marriage until the day Noah entered the ark. And then the flood came and swept them all away, and they had no idea it was coming. So this is, I'll tell you, one of my big problems right now is what is prevailing everywhere, which is that On roughly April 22nd of 2023, we will have a recession. When everybody is certain about what is going to occur, that should be a cautionary tale. So that's why I think that the bottom probably isn't in. I don't think that we've seen any of the consequences yet from the incredible increase in the supply of currency that flooded the planet. And I don't. The thing that would be nice to know is when will Noah get in the ark, and who is Noah? who is the person to look to? I could tell you one thing that I look at from a data standpoint, and I'll do this if I may. I'll share my screen.
Yeah.
So if you wherever you may be across the fruited plain and around the globe want to do this, you can go to marketstructureedge.com and look at the same data. This is the single most important thing to me. We tell everybody, think about what the broad sentiment is telling you, then what is the context? What is the calendar and cadence of the market? What's occurring? And we should talk about that. Their futures contracts expire today. They expire every last trading day of the month, and they're used by trillions of dollars to true up index portfolios, to hedge against market moves. And by the way, the S&P 500, the average stock in the S&P 500 has been averaging 3% intraday volatility, spread between the highest and lowest prices, for 200 solid days. I don't think that we've ever had that condition, not that long. We have had a lot of volatility in the pandemic, but for the extended period, this is the biggest. So the first part of that, and then divergence. Broad sentiment, context, divergence. We talk about those three things. Here's what I find worth thinking about. This is, whoops, I'm going to have to reload that. What I'm going to show you is a longer view of broad market sentiment. I'm going to take us back and look at how does this compare to previous periods. And I'm going to expand this out to the maximum data set. There was a change in the data in about July 2017. So that's our default max view. Here's what I want to point out, and it looks like, it's a seismograph. How am I going to make any sense out of that? This is demand as an algorithm. And most of the time it will be between 4 and 6. That's where the market trades. Right in the middle, about 5.5 is a GARP market. And the more time that stocks spend around that level, the better they tend to do. This is the price of SPY. Here's our peak. This was right, really the market peaked right at the transition from December to January last year. You could go back to November, that was an important point. And this is supply. So here's what stands out to me. If you look at the overall 5-year period that this data reflects, the level of supply is extreme. It's really the highest and the most extensive over the entire data set. Well, that tends not to bode well. If demand weakens as it has the last roughly 6 months and supply remains very high, that is a very difficult hurdle to overcome to get back to all-time highs or to get to 4,100. I'm not saying we won't. Sure, we could. But I look at this data and it tells me that I'm going to have to continue to be very aware of context and to trade short-term divergences, because that will be the only thing that will give me a statistical advantage over the market. That's how I think about it.
Tim, lots to digest. Joel's on mute, so I might as well just talk because Joel can't figure out how to unmute himself. He has to do it once a show, but actually he's been doing pretty good lately. Jump in. I mean, the rotation in this market has been nothing short of incredible. So this probably plays good to be using a product like yours, Market Structure Edge, where you can identify, what's got supply, what's got the demand going here. Because there are some stocks that are fully, just can't seem to catch a bid at all. And then there's other stocks that are just ripping higher here. And I mean, maybe 3-4 weeks ago, we were in this market where everything was moving together. We are no longer in Kansas anymore. Everything is separating and going in different directions here.
I agree.
Tim, where are you looking to now?
I'll tell you, it's challenging, Dennis, because I find the same thing to be true. And internally, because we're data geeks, and I'm not alone in this. The whole team looks at data. Divergences between exchange-traded funds and the underlying stocks, divergences between the futures contracts and the stocks. And here's something that we have been finding that I don't know that I have a a ready explanation for. Generally, I say if something seems too good to be true, it probably is. But that the broad measures have not necessarily reflected what is occurring in underlying stocks. The broad measures are being carried by small pieces of the market. Dexcom is a great example. And not a stock that that I've traded Dexcom and made lots of short-term money trading this. I haven't traded it in a long time, but look how this stock moved, and it's a great metaphor for the market. So we had this massive move in Dexcom. I think it was the best performing stock on Friday, and demand rose, but so did supply. Supply exploded, and so that tells me two things. That when this happens, it is a counterpart, is market makers creating stock, which means that will not be a durable move unless real investment shows up. There has been active investment in the market, Dennis. We can measure it. We can see price setting by stock pickers, but I again go back to my statement that it's a devil may care attitude. It's almost like the money that lost a lot over the through 2022 year to date has said, well, I'm riding this wave and I'm doing it with everything I've got. Well, that concerns me. Those things go back to our our last Monday when I said this professional poker player told me, people who chase straights and flushes have to borrow money to go home on buses, Greyhound buses. And I feel like it's that kind of market. People are chasing straights and flushes because you have a hard time finding good consistency. Look at Intel. I mean, Intel was in our momentum portfolio ahead of results.
Yeah.
And so you can look at it and say, well, is that justified? Well, look at the demand at 10. This is price. Supply falling. Well, that is what you would expect, but it gets to your point. I mean, it's in tech. Half of what is momentum, pardon me, at the moment, is tech, and half of it is everything else still. And that is a really odd condition. I could give you, in fact, I did in the Benzinga portfolio today. I don't like a lot of stuff. There are 53 components in my what I call alpha portfolio, but only 2 in this Benzinga pre-market prep portfolio because I don't really like what the data indicate. But here you have Arista Networks and Apache. Those are the 2 that have.
Uh-oh.
I think he needs to put more money in the payphone.
He's back. Joel.
It's collect call, Joel. It's a collect call.
Did the recording come on?
You just went down just for about 10 seconds there, Tim.
Oh,
so
sorry
we just
about that.
missed. When you're right, Rudy, you're
Okay.
going to tell us.
They gave us, you only have a couple minutes left. The
Okay.
calls is dying out.
That's right. The guards.
Remember when he used to call time?
Suspiciously.
At the tone, the time will be.
Well, what I was saying, Dennis, I agree with you. I don't love everything in the market that is in our momentum sorts, and there are reasonable numbers of them. But here's a great case in point: Arista Networks tech stock has great supply-demand divergence, as does Apache. And you'd say, well, those are 2 opposite things. Exactly. And you're right. There's to me, it's like a scattered covey of quail all through the market where things are occurring. It's very difficult to find something to latch onto to say, well, this is solid.
Tim, got a question here from someone in the Edge Mob, and he says he's curious why short percent equals supply. Do you have an answer for that?
I sure do. And so that's what you're looking at here. This is short volume. So it's very important to understand how the market works. That's the essence of Edge. If you want to beat the market, know how it works. Short volume is the percentage of trading volume for a given stock, but we can measure it in anything, the S&P 500, an industry, a sector, a portfolio, that is borrowed daily, rather than short interest. Short interest is a 1974 measure. Are you driving a 1974 car? Probably not. If you are, it's been restored. So it was created by the Fed. It is not a market rule. It's not a great way to understand how the stock market works. In 2010, FINRA implemented rules requiring brokers to report whether the transactions that they're handling reflect stocks that are owned by the customer or the broker, or they been borrowed or created. And market makers, when they're engaged in making bids and offers at the same time, are exempt in many situations from having to locate shares to short. So it becomes the supply chain of the market. Short volume is the way that bids and offers are facilitated. Therefore, fluctuations in it are a very good signal of opportunity. If you have, as in this portfolio, falling demand but falling supply, the market's going to that stock or that portfolio is going to recover very quickly because any demand will help it. When they converge, the market tends to struggle, or a stock or a portfolio. But that's what short volume is and why it is a supply measure. It's a very contemporary measure that reflects the rules that govern how prices are set today.
Tim, quick question for you. We got a big week. We got the jobs number. We do have some significant earnings reports. Turn of the month. Does Market Structure Ed really care about the turn of the month and tendencies in the markets on that, or is it just strictly the supply, some supply and demand data?
Well, one of our favorite mantras is new month, new money. When retirement plans receive inflows, there are consistent inflows from people's paychecks. We run a 401k and profit sharing plan for our enterprises, and there are rules. Those things have to be marked and distributed and submitted to the managers at a set cadence, and they have to get deployed. Managers can't just sit there, particularly if it's model driven, and that stuff happens to come in most of the time, not all the time, in the beginnings of months. And so that's why we say new month, new money tends to be a time when the market will do better. But this time around, think about this. So futures contracts expiring today. Let's look at broad sentiment where it is right now. So I'm going to zoom that in. So here's the demand side, way above the red line. The red line is a cautionary sign. It says that the market's propensity to hold on to gains and be higher a week or two out from now is statistically very difficult. Statistically, it's zero. Statistically, it's minus 5%. The supply side has fallen. So demand has risen and supply has fallen. That's why stocks rise. Diverging supply and demand in the whole market. But we're at levels where I wonder, Joel, whether the new month, new money will mean what it normally does this time around. Plus, there's that unusual, it's the only Fed meeting of the year that is like this, where the meeting happens on the 1st and there's an announcement on the 2nd. So November 1st, 2nd Fed meeting. And we have seen the market move dramatically on those around those meetings. And with demand already peaked, the mathematical probability is that the market moves down. Doesn't mean it will. It could jump. I mean, it happens periodically. But those are things that make me very cautious. I'm more inclined here to wait to see what happens than I am to pour money into the market.
All right. Like always, we're going to keep watching to see what happens in the market today. I think I'm in the same camp as you, Tim. The question will be, when will we see a turnaround, and if it comes, right? Right now, it seems like the rally has a little bit of legs, but the big boys did report towards the downside, so we're going to have to wait and see. But appreciate you like always, and I do want to let the chat know, go ahead and get your free 14-day trial, of course, to all this data that you guys see here. And you guys could also have the Market Structure Edge. Appreciate you like always, Tim. Have a great day and enjoy Asheville.
Back at you. We're headed to Charleston. We're headed to Charleston today.
One of my favorite towns.
Is that nice?
Great food, great dancing, great people. Chow down.
Indeed. Okay, I'll see you from there next Monday.
Go to the Ghost Graveyard. Ghost Graveyard.
Okay, we'll do that. Maybe today on Halloween. Good to see you guys. Thanks very much.
Have a good one, Tim. Take care. Happy Halloween.
Thank you. You too.
Don't get booed in this market, you know. Let's go ahead. Let's take a look out in the market. How are we doing right now, Joel? How are we hanging in?
It's been there's just sellers out there. Not waves of sellers. We're down 23 handles. We're starting out in the red. The problem with a day like today is that we're sport. I mean, the way we ripped up yesterday. So my first downside target, if they can keep this going, is about 20 handles lower. And right now, the way, just the way we had that strong close and then that ridiculous after hours pop now, I don't have anything at 3,900, but I think a lot of people might be, wow, we went from 3,500 to 3,900. We still really haven't got any great information. So, and that's also mid range on the session. So I'm looking at the edges 37, 3870, and then 3900. Triple D. What are you seeing? Anything out there? Anything of note, imbalances, or just kind of bids and offers?
Oh, he's on mute. Look at that. Get him, Joel. Get him. Hit him
Oh
hard.
yeah,
Hit him
yeah,
hard.
yeah.
Dennis.
Hit me. Smack me.
Okay.
I just made fun of you for it, and I literally just.
Well,
did
you
the
know what?
same
Also,
thing.
the problem is what people don't understand is like when we're doing an interview. I know when
we
Mitch
mute,
is coming
unmute,
in.
we mute,
I
unmute.
I know when Mitch is coming in. Okay, so when someone stops, and I can tell by your like if you're
coming
getting
out.
ready to go, or if you're going like this, then I know you're trading,
Dennis
and I know you're
bitching.
not going to
Dennis
ask
bitching.
something. But if you look intense, then I know you're going to say something. I was on mute. That was my bad. But
We gotta enjoy it. We gotta enjoy it.
that's how we have fun on pre-market prep, man.
The one
Maybe-
thing you tend to notice, and everybody's talking about on social media, is GameStop's having a day. I don't know if there's news on it, but it's up 10%.
The game stopper.
Yeah, so we just poo-pooed short squeezing.
It's a game
but, you know, they
stopper.
have their moments, and GameStop is having another moment
That's why.
here. So
We
be
did
careful
it.
on those high short interest stocks. We know how this works. So I'm just saying, GameStop's moving. So just caution on those high short interest stocks.
the triple
Not caution,
BY.
but if you're short those things, caution. That's all.
I'm gonna be watching at least. We'll be watching to see if any of these really get moving.
That's bad for the market. We know that, right? That
It seems
overall.
like the market has a lift, doesn't it? Seem like that, Joel? The market gets going, and then all of a sudden, they jump into these, short squeeze names, and that's the top, and it just collapses. That's like rocket science. You get the 3, 4, 5, 6, maybe 10-day rally, and then
they rally the trash.
The trash,
rally
the
the trash.
trash happens, and then it just turns around. They start going down.
Wow. Hey, we'll have to be watching out for notable reports this week, right? I mean, you got Uber, Pfizer, AMD. What do you guys think about these reporting today? Oh, reporting this week.
Yeah, there's a lot of companies. So it's not the big names this week, but there's a lot of, mid-tier tech companies. And Mitch, can you show the calendar? You probably
Of
have
course.
Benzinga Pro
You got
calendar.
it coming up
AMD,
right now.
so I can headline. I wrote down the top 15 names that I'm looking at this week. Tonight, there's not much, as NXPI is probably the biggest name reporting tonight. But tomorrow, we're going to get AMD, Airbnb. We're going to hear from Pfizer. We're going to hear from Uber. Wednesday, we're from Qualcomm. Roku's always interesting. CVS. Thursday is a big day. We're going to Square, PayPal, and Coinbase, and Twilio, and Team. And Starbucks is reporting. Peloton, if you like Peloton.
I knew it. We
Gotta
could've missed
throw
the
it in
Peloton,
there. Friday's DraftKings. Fubo. Mitch, Fubo. That was your stock back in the day. We all did Fubo. Fubo was awesome for a while, but not so much.
I tried to warn people too. I saw them raising their prices, and I was like, yeah, that's not going to work out for them.
Yeah.
And definitely DraftKings also on Friday. We'll see how the gambling stocks are performing, see if they can get a lift. It's a fun week still. These are kind of more the stocks that I like to trade. So, bigger caps are fun also, but we'll see what happens this week with these earning stocks. Any of these stocks on your radar, Joel?
No, I'm just looking. I would at all the different ones. If we we got Arista Networks after the close. Let's take a look at that. That's not the one that did the spot split. That was PANW. I don't know. That's a tough looking chart. I'd be more inclined to wait for a gap fill in this one. I don't know why it jumped up the other day, but I'd be support down at 112, and I'm sure people would be looking to trim it. We closed right at yesterday's high, 121.75. But no, none of these are really. I just wanted. People are asking about Intel, something we're both owning. Did have a good day on Friday, getting some follow through.
To get my money back.
yeah, I got a ways to go before I get my money back.
Like the true bag holder I am. Coming back to that 32 area where
I just want to get break even.
Yeah, break even. Let it go down.
Break even.
Sounds so
got
exciting.
a little bit today. It's got a little bid today. I'm really not much. We're at 29.32. I don't think there was much in the 29 handle. Actually, I mentioned this level on Friday, a couple highs at 29.60, 29.70. So take a look at that. The AMD looks sleepy. Now, they've already lowered the bar, right? AMD.
Yeah.
They came
No, they
out.
already. Well, yeah, they're reporting Tuesday, but you're right. They already kind of pre-announced. So
Yeah.
you're right. Like we kind of know it's not going to be great. Hopefully the market remembers that. Like, oh, but I mean, so now they lowered their own bar. So what's that mean for you?
That means that they got a chance of going up if they beat the lower bar. Keep an eye on 62.50. That splits the highs from Thursday and Friday. But all right, well, good to be back here in the home office. I hope you guys enjoyed the show from Ann Arbor on Friday. Some great kids, some smart kids. Got some good information out of them, and I'm gonna head out of here. Triple D, good luck out there, Mitch. I'll check in with you later on.
Appreciate you like always, Joel. We'll see you a little bit later on at the close. And of course, if you guys want to keep up with everything that Joel does, he goes to PreMarket Prep Plus. Check that out, premarketprep.com, so you guys can join Joel doing some more ticker time. Dennis, you ready for the week? We ready?
We're trying, man. Halloween tonight. That's what's happening tonight. Kids are pumped. Gonna be out trick or treating there. You going trick or treating, Money Mitch?
I didn't go for the costumes this year. Too much inflation pricing.
No costumes for me either. I mean, we didn't even get dressed up today. We kind of
did you see the cost of candy?
Has it gone up?
Oh man!
Killing us,
Just put it this way: these poor kids, they're getting candy. They're getting one.
Yeah, you used
they're
to
not
get
getting
2, 3. Now you're getting one.
Yeah, now you're getting
get one little Smartie box that has 3 Smarties in it. That's what you're getting. Yeah, because the shrinkflation in those Smartie boxes, I was like eating one of those. The kids got them there, and I'm like, there's like 4 Smarties in this. These little Smartie boxes, me and Money Mitch were, well, when I was a kid, Money Mitch younger than me. When I was a kid, I had like 20 in there. Money Mitch was in there, I probably had 15 in there. Now they got like 3 in there. It's ridiculous, the shrinkflation.
I used to be the kid looking for the bowls, right? The people that just put out the bowls, because, you know.
And you just scoop
that
it
bowl
all
was
up.
Gonna be
You're
mine.
like that, like, come to Papa.
I don't even have to go houses anymore. I got the bowl. There ain't going to be no bowls this year, kids. I'm sorry. There's no bowls out this year. Yep. It's going to be tough. We'll see what happens. Halloween. Hope you guys have a safe one. And, of course, I hope the kids get to have some fun. And hopefully some people actually have candy, because you might see some houses turn off their lights early today as they're like,
can't afford candy. Can't afford to give out.
No candy. I'm sorry. No candy here. Yeah. We'll see what happens. Have a good one, Dennis.
Okay,
enjoy your trading action. All right, we'll get you guys over now to our Benzinga live stream. This includes multiple shows. We're trying to do something more often where you guys can just sit in one stream and hang out with us, right? All day. We're going to do some live trading action. Then we'll get into some futures action, of course, with Ninja Trader. Then we'll have AB with Benzinga Live, followed by Stock Market Movers. We got 4 great shows in one stream for you. Come over to that stream. That's coming up next, starting at 9:05. We'll see you there. Like always, hit the thumbs up. If you guys enjoyed pre-market prep and all the action this morning, we'll keep building for you guys. And you guys do us a favor. Just hit that thumbs up and the subscribe button down below to let us know that you guys appreciate our content. See you next time, and hit the like on the way out. Let's go. Let's go. Let's see what we got today. I'm excited. Let's get this market started.